In our previous lesson, we presented various indicators regarding consumption and business optimism. However, it's not only economic indicators that tend to drive the market's expectations. Today we will show a number of other factors that could create volatility in the markets. Among them, I would be highlighting communications from central banks. From time to time, central banks tend to issue various announcements which tend to include warnings or explanatory notes on where a central bank is heading to. Should such announcements show intentions for a tightening of its monetary policy, we may see its respective currency gaining. Statements following the meetings on the release of an interest rate decision, a central bank also issues an accompanying statement providing usually an overview of the economy and where it is heading. Usually in that accompanying statement, the bank also includes a paragraph describing what its future intentions are. Some refer to it as forward guidance. Overall, should the bank's forecasts show an expectation for a flourishing economy and its forward guidance show intentions for tightening of its monetary policy, that could be perceived as a positive note for its respective currency and vice versa. Then we have the minutes of the meetings, a detailed account of the policy meeting. The minutes offer insights into the different views among central bank policymakers which may not be reflected in the statement. They are closely watched for clues regarding the outcome of future rate decisions. Also, speeches by the members, governors of central banks or even board members tend to make statements which may include personal perceptions on where monetary policy may be heading to or for the state of the economy, and should they express an opinion that the market does not expect, that could create some volatility for various pairs. Also, speeches by other policymakers besides central bankers such as finance ministers, etc. Also, other policymakers such as head of state or finance ministers may express opinions or announce the direction of the general fiscal policy in a country, or even announce the expansion or curtailing of spending plans and thus affect the markets. Beyond politics, also officials of important organizations such as the IMF or OPEC could make statements that could affect the market. And the list goes on, and could also include gold and oil price movements, the period where earnings reports are being released, political factors, social unrest, etc., etc. In the next lesson, we will discuss various terms and definitions used in the jargon of the FX market.